Good day. How you doing? Welcome to another episode of Option Stoppers University. And I'm going to show you the one trading strategy I use today to make $390 in the market. Now, before we get into it, I always say success has receipts. So here's the receipt. As you see, the profit and loss for today, $390. And I made most of this in about 5 minutes. As you can see, it says over here, real time, that it is a real account. This is not a fake account. It's real-time account connected, real-time data. And I want to show you something that maybe you've missed or you've not done in the past, but it's super important. Nowadays, the market is trapping traders. What does that mean? That means that it's capitalizing on the hope of traders to catch super huge, super extended moves. And a lot of times the huge moves are continuous and it makes you want to FOMO. What do I mean by that? Let's look at earlier today, okay? At 9:30 a.m., look at that. We had a huge move to the upside. 5, 10, 15, 20, 25 minutes of straight upside momentum in the market. And guess what? I didn't get into any of these trades, okay? I didn't get into any of these trades. Why? Because I knew what the market was trying to do. It was trying to trap traders. And look at that move down. It trapped traders and it caught them and moved down. But what I did and what I usually do is I always wait for a small pullback or reversal. So what the market is doing now is that a lot of people saw the market today and said, hey, we're moving up with such volume. Look at the volume. Look at the green candles. Everything said bullish. Everything was saying they were going to be green. Okay, the buyers were in control. Buyers were going to win. And just when you think you're going to have continuation, the market pulls an okie doke on you. But if you learn patience and if you learn the right scalping technique, you can be in and out in minutes. So I'll tell you the first trade I took today, okay? I waited till about 9:45 where the market came down here and I caught this bounce up and I caught calls and I got all the way here and there was my profits. This 5-minute candle was the trade I took today. That's all I did. Why? Because I understood what the market was trying to do. I didn't try to catch the whole move. I caught a piece of it. And the reason I did that was super, super key. Look at what happened before the market opened. Okay. One thing that if you guys are not doing, that's super important for you guys to start doing is marking pre-market highs and lows, especially when trading ES or SPY. So if you look over here, pre-market high, you see I kind of marked it over here. It's a little bit higher. Pre-market high was around this level. So I'm going to make this color green so everybody can see it, okay? So pre-market high was around here. What I was looking for was for the market to reach here, okay, pull back some, okay, and then have a continual move up. And the 9 EMA bounce was the perfect strategy. So around 9:45, I got in here. And what I noticed is this, okay? I was only looking for a quick scalp, a 5-10 minute move to the upside. And I had over here, which is one of my Billy bands, a place of potential rejection, plus up here, which was the high of a previous day. So 45.51 was marked on my calendar because it was the high of 2 days ago. You see, it comes from 2 days ago. So that was my profit target. And if you noticed, I got into this trade, look at that, around 9:43, and I got out around 9:47. I didn't spend too long in the trade because I knew that once we broke highs, that the market was going to try to reverse. And how did I know that? I've been noticing something lately. When we break high of days and we break low of days, people and amateurs are looking for continuation. But what the market likes to do around that area is trap you and then take the market to the opposite direction. I'll give you another example. Look at the low from yesterday, okay? This was the low from yesterday around here, okay? You see we got close to the low of yesterday in pre-market and people got trapped and guess what? It moved up. We came all the way down close to the lows again and people got trapped and then moved up. By the time this final move happened, it would have been hard to predict this continuation. So what I like to do is catch reversals. So if I was going to play the downside today, I would have waited for a downside move such as this and a retest of, guess what? The orange 9 EMA. That's my bread and butter. When I see a move going in a particular trend, I never be the first buyer. I'm always the second or third buyer. I wait for it to bounce off the 90 EMA, and that's usually my entry. If I was trading around this time, this would have been the perfect time to get into puts. But guys, because I caught a very quick move in the morning, I was able to make $390 like I showed you guys for the day, almost 400 bucks. And I just called it a day. It's Friday. No need to ruin my profits on the last trading day of the week. So here's some key lessons you need to extrapolate from this video to make your trading better. Number one, make sure you're marking the highs and lows of the previous day and pre-market high and lows. Number two, never be the first buyer. I'm going to tell you this once and I'm going to tell you this twice. Never ever be the first buyer. I don't care if a candle moved 300 points. I don't care if the candle moved 500 points. I don't care if the president said we're opening the floodgates and the market's going to go higher. Never be the first buyer. Wait for some type of retest to confirm a move. Because guess what? If the market is really moving in a trend, what's usually going to happen is it's going to be continuation. And that gives you space in your entry. So that way you don't have to perfectly time your entry. Why? Because when you're the second buyer, what's going to happen is that you're going to have a lot of support behind you because you're not the first point of support for that particular stock at that particular time. So for example, the market was already moving up, okay? And in the morning, 45.35 became the first level of support. So when I was buying at 45.42, this was not the first level of support. This was the second level of support for buyers. I caught a quick 5 to 10 point move up, and I took my profits. And that's really been my sweet spot. If I get anywhere from 5 points to 10 points on a particular move, I'm usually golden. If you can consistently see carry 5 to 10 points, then all you need to worry about is your scaling. I actually wish I was still trading later during the day because this would have been a beautiful action for me to trade. I mean, clear fade off into the night, the market coming all the way down to 49.93, another previous low of the day. That's why I highlighted green. I would have easily taken that move. And the best entry, if I just draw a trend line right here, boom. Once we broke this trend line, like I said, this would probably have been my first entry, my second entry here, my third entry here, my fourth entry here, my fifth entry here, my sixth entry here. Every time it touched and rejected the 9 EMA or the 9 exponential moving average, that would have been a very good time to get into the trade, make a quick scalp, and make profits. Because I want you guys to realize something. The definition of scalping is going in with heavy size and being in for a short period of time. So what you want to do as a trader is not try to stay in the trade for a long time, but maximize the opportunity the market gives you by building your confidence to increase your size for short periods of time. So usually when I'm in a trade more than 4 to 5 minutes, I start to get a little bit nervous. So guys, remember, draw your pre-market high and lows, okay? Never be the first buyer, and the trend is your friend. I'll catch you guys on the next one. Josh out.